Ladies and gentlemen, it's your boy Ryan Dins here on Election Day, and we are going to talk about the best 3 REITs to buy in November 2020 for the money. Woo! The first REIT that I'm going to talk about is probably the most popular REIT for investors, and that is O, which is Realty Income. Realty Income invests in a lot of commercial properties. So, restaurants, movie theaters, these kinds of things. They basically own the properties and then rent them out. They're just a gigantic real estate company, and they've been crushing it, raising dividends for years. O is a dividend aristocrat, which means it is increasing its dividends every single year for over 25 years. So with a reputation like that, you can be sure that in the future it's going to continue to increase dividends because they don't want to lose their status as a dividend aristocrat, because then they're going to lose investors. Everything I like about O, it's got a 4.76% yield, which is very good. The only thing I don't like is its price to earnings ratio is 48.61, which is a little bit higher than I like to be. I like to be in the teens is great, 20s, that's okay. Once you start getting above that, it's a little bit overbought in my opinion. A little bit, price is a little bit too high right now. That could change in the future. What I do is when I see it around 50, even below 55 is when I start buying O. So look for it in the very near future. Alright, the second REIT that I'd like to talk about is called STOR. S-T-O-R, which means Store Capital. The difference between them and O is commercial real estate. STOR is single unit residential real estate. So they're pretty much your typical buy a ton of properties and then rent them out. That is what they're doing. They've been around for about 9 years. They're constantly growing. They have a dividend of 5.26, which is even better than O. But the beauty of it is its price to earnings right now is 23.8. 23.8 is pretty good for a REIT, because REITs are notoriously high when it comes to price to earnings, because everyone wants to own these for the dividends. When you look into these REITs, you have to look at it differently than a stock. They're all going to have a higher price to earnings, and they're all going to have a little bit higher of a dividend. And they pay monthly. That's the beauty of these. They give you dividends every single month. So that brings us to our last and final REIT, which is Main. Stands for Main Street Company. Main Street Company gives funding and equity to real estate investors. So they're not your typical REIT like the other ones are. O owns commercial properties, STOR owns residential properties, and Main is on the other side of the fence with the funding. Main is the riskiest of the 3 that I'm mentioning by far. Main has had a lot of volatility lately, but the good thing is it's got an 8.62% dividend, which is huge, and you get that every month. So I don't have a ton of it, but I do like to hold a little bit for that huge dividend. Its price to earnings ratio is 11.96, so way undervalued. And hardly anybody's talking about this. In my opinion, this is a good thing to get on, especially being that it's been beaten up the last few weeks. I think it's a good buy right now. With that being said, when you look into these REITs, make sure you do your research with a different tax structure. They're not taxed as capital gains. They're a little bit different. They're taxed as income because it's different. You're basically... REITs, in a way, is like owning real estate and then charging your tenants to live there, and then you get the profit at the end of the day. With REITs, though, other people do the work for you. At the end of the day, you don't own the properties, but you do own the stock, which you could sell at any time. So that's why I think REITs are a great investment, because you don't have to do any work. You just sit there and collect the dividends, and then after these stocks appreciate, which I think all 3 will, then you sell them after you collect the dividends, after whenever you need the money. Hold them for years is what I plan on doing. And then if I think they're overbought, then maybe I'll sell them. But for now, I'm just going to collect the dividends. $1 every day for my dividends. I just hit that a few months ago. I only have a little less than $7,000 invested. I've only been investing in dividend stocks for about 5 months. So you might say, oh, what's $1 a day? It's a growing point, because then when it gets to $2 a day, $3 a day, all of a sudden it'll be a little bit of money. once that gets to $20 a day, all of a sudden you're making a little bit of serious money. Even at $1 a day, you got to look at it this way. There's a lot of people in this country who get paid $10 an hour. I have my money working 3 hours for me. My money works for me at a job that gets paid $10 an hour, 3 hours a month. So next month, still going to make that. Month after, still going to make that 30 bucks. But it's going to grow, snowball as I add. And then eventually, I might be making $10, $20, or $100 a day. My ultimate goal is to make $100 a day in dividends and retire. You might say, oh, well, that's only $3,000 a month. That's not really enough to retire. You know, maybe I'll have this YouTube channel. Maybe I'll be able to make money selling art and music. I'm just saying, $3,000 you can retire semi in the fact that you don't have to do what you want to anymore. If you have $0 in passive income coming in and you hate your job, you can't quit. If you have $100 a day coming in passive income, you can quit. You have flexibility. You don't have to worry anymore. You know? So it's all about getting out of the rat race, being able to get your financial freedom. For me, this isn't about getting rich. It's about having my freedom. I work too much. I hustle too much. I'm okay with that. I'm young. I'm going to work even harder for the next few years. But then, when I'm in my 40s, I'm going to be laying on a beach, eating fish tacos, riding jet skis. Because that's what I'm doing. I'm setting myself up for early retirement now by buying these REITs. So do your research. Make sure you get your hands on some REITs. It's great to get those monthly dividends. Have a great day. Thanks for joining me and have a great election day.